You know, people always want to know what rule I follow that keeps me from losing everything in the market. They want some secret formula, some magic whisper of Wall Street that only the old-timers pass along in smoky rooms. But I'll tell you something, plain and simple, the rule that prevents losses isn't hidden. It's not in a book you've never read. It's not in some indicator you haven't downloaded yet. It's in discipline. It's in control. It's in cutting your losses quickly, without hesitation, without emotion. And if you think that sounds too simple, ask yourself this: how many times have you sat with a losing position, praying it would turn around, only to watch it sink deeper and deeper? You see, the market doesn't care what you hope for. It doesn't care how much work you put in. It doesn't care that you need the money for rent, or that you borrowed it from a friend. The market is bigger than you, bigger than me, bigger than all of us. The only way a man survives in it is by making sure he never lets one bad trade become his ruin. So when I talk about the rule that prevents losses, I'm not talking about avoiding every mistake. Mistakes come to us all. I'm talking about never letting one mistake turn into disaster. And you might say, well, Jesse, isn't it hard to take a loss? Doesn't it sting? Of course it does. Every time I've cut a trade and watched the ticker flash red, I've felt the sting. But the sting of a small loss is the price of admission to this business. It's the tuition you pay to stay alive long enough to catch the big move. And believe me, that big move doesn't come to the man who's buried under a mountain of wishful thinking and stubbornness. Let me tell you a story. Years ago, I sat watching a stock that I thought was about to turn. My charts told me one thing, my instincts another. I went against the tape, against the market itself, because I wanted to be right. And what happened? The stock kept falling. Did I cut it? No, I told myself it'll come back, just wait. The next day it dropped again. The day after, same story. By the time I finally sold, I had lost more than I could afford. Now, here's the lesson: the stock eventually did turn, weeks later. But by then I was out, broke and licking my wounds. If I had obeyed my own rule, cut the loss the moment it showed me I was wrong, I'd have lived to fight another day. Instead, I wasted time, energy, and capital, all because I couldn't admit a mistake. Now, don't fool yourself into thinking the market owes you a second chance. It doesn't. If anything, it punishes the stubborn more than the ignorant. That's why I say the first and only defense you've got is quick loss cutting. Do you think a general marches his troops into a battle without planning how to retreat? No, sir. The retreat isn't cowardice. It's strategy. It's the way you conserve strength for the real fight. Same in trading. A small loss is nothing but a retreat. And every retreat, if taken wisely, puts you in position for a future advance. Some of you may be nodding right now, saying you understand. But let me ask, when was the last time you actually obeyed that principle? When was the last time you stopped out right where you planned, instead of moving the stop lower, hoping to give the market just a little more room? That right there is the graveyard of traders. Just a little more room has buried more accounts than any bear market. And why do we do it? Because we let emotions override rules. We get married to a trade. We tie our pride to the outcome of one position. And pride, my friend, will cost you everything if you let it. So when I talk about the rule that prevents losses, it's this: never let pride interfere with discipline. The chart will tell you when you're wrong. The tape doesn't lie. If the market moves against you beyond your line in the sand, you cut. No debate, no argument. Because if you hesitate, you're finished. Do you think the sharks out there hesitate? No. They take the other side of your trade with a smile, and the market rewards them because they have the courage to act while you have the weakness to wait. I've always said, money in the market is made by sitting, not by trading, but don't mistake that. Sitting means sitting with the right position, the one that's moving in your favor. It doesn't mean sitting with a loser. That's not patience. That's paralysis. And the difference between the two is life and death in this game. You can sit and watch a winning trade grow, but you must never sit and watch a losing trade sink. Do you see the distinction? Now here's another truth you can't expect to win every time. Nobody does. not the biggest operators, not the smartest analysts. Losing is part of the game, but losing small, losing quickly, that's the only way you stay alive. It's like breathing. You exhale so you can inhale again. You take small losses so you can take big gains. Without the one, you can't have the other. Think about the men who build fortunes in this market. Do you imagine they're right 100% of the time? Nonsense. What sets them apart isn't how often they're right, but how little they lose when they're wrong. That's the secret. And it's not even a secret, it's just common sense practiced with iron discipline. But tell me, do you actually practice it? Or do you just nod along until the next time you're tempted to hold a loser too long? I'll remind you of something. The market is designed to test your character. It's not just about numbers on a chart. It's about the strength of your will. Can you act against your emotions? Can you admit you're wrong faster than the next man? That's what this rule is really about. Not just protecting your money, but proving you've got the discipline to stay in the game long enough to see the real rewards. I learned long ago that a trader's main job isn't finding winners, it's avoiding disaster. The winners will come if you wait, if you study, if you prepare. But disaster comes the moment you break the rule, the moment you let one trade wipe out a month's worth of progress. Do you want to build wealth, or do you want to gamble? That's the question you must answer every time you enter the market. Because gamblers cling to losers. Traders cut them without mercy. Which are you? Don't tell me it's easy. If it were easy, everyone would be rich from trading. Cutting a loss takes courage. It takes humility. It takes going against every instinct to hope, to pray, to wait. But the man who masters that skill, who cuts losses, as naturally as breathing, he's the man who survives. And survival in this business is everything. Now, some of you may wonder, Jesse, how do I know exactly where to cut? How do I set that line in the sand? Good question. The answer lies in your chart, in your tape reading, in the plan you make before you ever buy a share. You never buy without knowing exactly where you'll sell if you're wrong. That's not optional. That's the rule. If you can't define your risk before you enter, you have no business entering at all. Would you step into a boxing ring without knowing where the ropes are? Then why step into the market blind? Here's another question for you. Do you know what ruins more traders than anything else? It's not ignorance. It's not lack of tips or information. It's lack of preparation. They enter trades without a plan, without a defined risk, without an exit. And when the stock turns against them, they freeze. They pray. They hope, and hope has no place in trading. You must trade like a professional operator, not a gambler in a bucket shop. Professionals know that the first duty is defense, not offense. Protect your capital. Keep your powder dry. Don't waste it on wishful thinking. Every dollar you save by cutting a loss is a dollar you can use when the real opportunity arrives. And let me tell you, those opportunities don't knock every day, but when they do, you'll need capital ready to move. Do you think you'll have that if it's tied up in sinking positions? I'll say it again, the rule that prevents losses is to cut them small and cut them early. No exceptions. Every violation of that rule is a crack in the foundation. And every crack, sooner or later, brings the whole structure down. You may think you're the exception. You may think you can hold a little longer, wait a little more. But the market doesn't care what you think. It rewards discipline, not defiance. You know, I've met traders who brag about never taking a loss. They say, I always wait until the stock comes back. And maybe it does once or twice. But I've also watched those same traders disappear when the market finally gave them a stock that never came back. That's all it takes, one stock, one mistake, one refusal to cut, and they're finished. Do you want to be that trader? Or do you want to last long enough to see compounding work in your favor? That's another thing people don't understand. Compounding isn't just about letting winners grow. It's also about avoiding the kind of losses that set you back years. If you lose half your stake, do you realize how much you need to make just to break even? 50% down requires 100% up. And that kind of recovery is rare. But if you cut losses small, 5% here, 3% there, You're never digging out of a hole. You're always in position to advance. Isn't that a better way to live? Now let's get practical. When you study your charts, you should always identify two levels before you enter the level that tells you you're right, and the level that tells you you're wrong. The first is your breakout, your confirmation. The second is your stop, your line in the sand. Both are equally important. And once you're in, your job isn't to argue with the tape, it's to obey it. If the stock behaves as expected, you sit. If it doesn't, you cut. Simple. But tell me, do you actually trade that way? Or do you complicate it with excuses and rationalizations? Excuses won't save you. Rationalizations won't bring back a sinking account. Only rules, obeyed without hesitation, will keep you afloat. And I promise you, if you make a habit of cutting losses fast, you'll notice something incredible. You'll begin to trade with confidence. You won't fear the market, because you'll know no single trade can hurt you badly. You'll have freedom to wait for the real setups, because your capital won't be tied up in corpses. And with that confidence, you'll finally be able to let your winners run. Doesn't that sound like the way this business should be? I want you to imagine this: two traders, side by side. One takes small losses, again and again, while waiting for the right stock to move. The other refuses to cut, holding and hoping. A year later, which one is still in the game? Which one has capital? Which one has the mindset to keep going? The answer is obvious. Yet most people choose the second path. Why? Because discipline is hard. Because ego is loud. Because patience is rare. But remember, the market is a stern teacher. It punishes stubbornness and rewards humility. It doesn't matter how smart you are, how much you studied, or how good your analysis looks. If you can't cut a loss, you'll eventually lose everything. That's the truth, whether you like it or not. So I'll keep saying it. As long as I have breath, the rule that prevents losses is the rule of discipline. Cut quickly. Cut cleanly. Cut without regret. Because regret won't bring the money back. Only the next opportunity will. And you'll never see that opportunity if you're stuck nursing a dead position. And maybe you're thinking right now, but Jesse, what if I cut and the stock turns around the next day? Won't I feel like a fool? Yes, maybe you will, but I'd rather feel like a fool with a small loss than like a pauper with a blown account. Wouldn't you? I've made that mistake enough times to know. The pain of missing a rebound is nothing compared to the pain of ruin. You can always re-enter a stock. You can always take another swing. But you can't trade if you're broke, and you can't rebuild an account that's been wiped out. This business, at its heart, is about survival. Survive the losses, survive the setbacks, survive the temptations. Because if you survive long enough, the tape will reward you. The big move will come. The trend will reveal itself. And if you're alive, with capital ready, you'll catch it. But only if you've obeyed the rule that prevents losses. You should never, under any circumstance, enter a trade without knowing exactly where you will get out if you are wrong. That is the rule, plain and simple. It sounds easy, but in practice, it's the hardest thing most traders will ever learn. Do you know why? Because men are quick to see opportunity, but slow to admit defeat. They love the entrance, but they hate the exit. They dream about profits, but they never plan for losses. And yet, the exit is where your entire survival as a trader lies. When I say enter a trade only with a predefined exit point, I mean you decide in advance what price will prove you wrong. You make that decision before you ever click to buy, before you ever commit $1. Once you're in the heat of battle, once the ticker starts flashing and your money is tied up, your judgment will be clouded. You'll want to hope. You'll want to delay. You'll want to rationalize. So the only protection you've got is the line you drew before emotions got involved. Tell me, when you entered your last trade, did you already know where you'd cut it if the tape turned against you? Or were you just planning to watch how it goes? That's the trap right there. Watching how it goes is not a strategy. It's gambling. It's giving the market permission to decide your fate. And the market doesn't care about your fate. It doesn't care about your feelings, your rent, or your dreams. The only thing it respects is discipline. Without that exit plan, you've already lost, even if you don't know it yet. I've seen too many traders buy a stock on excitement alone. They hear a tip, they read a headline, they look at a chart and see a pattern they think will explode. And in they go, without a thought of defense. But when the stock dips and dips again, they freeze. They tell themselves it's temporary. They tell themselves the market is wrong. But the market is never wrong. The market is the final judge, the final authority. And if you didn't mark your line in the sand before you bought, you'll be swept away before you even realize what's happened. Let me give you an example. Suppose a stock breaks out past a resistance level and you decide to buy. Fine. But before you do, you should be asking what price level, if reached, proves this breakout failed. Where is the point that tells me the stock isn't behaving the way it should? Maybe it's 5% below the breakout. Maybe it's under the last consolidation low. Wherever it is, you must define it. And once you define it, that's your exit. That's your insurance policy. Because without that insurance, the risk is unlimited, and unlimited risk has destroyed more men than bad tips ever did. Have you ever noticed how easy it is to dream about profits, but how hard it is to imagine losses? The mind loves to picture a stock doubling, tripling, running to the moon. But when it comes to the downside, the mind shuts its eyes. It whispers, "Don't worry, it won't happen to me." That's why predefining your exit point is so critical. It forces you to face the possibility of being wrong before you even commit. It makes you calculate the cost of error in advance. And once you know that cost, you can decide if the trade is worth taking at all. Think of it like insurance on your house. You don't buy insurance because you expect the house to burn down. You buy it because if the worst happens, you won't be ruined. In trading, your stop loss is your insurance. Without it, one fire can wipe out your entire wealth. And make no mistake, fires come. The market will test you, trick you, and sometimes turn against you when you least expect it. Do you have insurance in place, or are you hoping luck will protect you? I'll tell you something from my own scars. In my early days, I'd rush into trades full of confidence. I thought my chart reading was sharper than the rest, that I could see moves others missed. And sometimes, yes, I was right. But the times I was wrong, I had no plan. I'd sit there, paralyzed as the market marched against me. What should have been a small, controlled loss turned into a devastating blow. It took me years to learn the discipline of defining my exit before entry. And when I did, everything changed. My confidence grew, not because I was right more often, but because I knew exactly what to do when I was wrong. Now, some of you might ask, "But Jesse, how do I choose that exit point? How do I know where to put it?" The answer is in the tape, in the chart, in the structure of the move. You look for the level that, if broken, invalidates your entire reason for entering. That's the point. Not a random number, not a comfortable distance. It must be logical based on market action. If you're buying a breakout, your exit might be just below the breakout level, because a failure there tells you the breakout was false. If you're buying near support, your exit is just below that support, because a break tells you the support has failed. It's simple, but it requires honesty. Are you honest enough with yourself to admit what would prove you wrong? Another thing, the exit point is not something you adjust out of convenience. Too many traders set a stop, then move it lower once the market tests it. They say just a little more room. But that's not discipline, that's self-deception. The moment you move your exit to avoid the pain of loss, you've already broken the rule. And the market, cruel as it is, will punish you for it. Do you want to trade with rules, or do you want to trade with wishes? Because wishes will empty your account faster than any bear raid ever could. Remember, trading is not about being right. It's about managing risk. The best operators in the history of the market weren't right all the time. What they did was limit their losses when they were wrong and let their winners run when they were right. The first part of that equation, the one nobody likes to talk about, is only possible if you define the exit before you enter. Without it, you can't manage risk. You can only react to it. And by the time you're reacting, it's usually too late. I want you to picture this. You're standing on a battlefield. You wouldn't march forward without knowing your escape route, would you? You wouldn't charge blindly without knowing how you'd retreat if the tide turned. Trading is the same. The exit point is your escape route. Without it, you're surrounded, trapped, doomed. Do you see how vital it is? The funny thing is, once you start practicing this discipline, trading becomes less stressful. The uncertainty doesn't vanish, but your fear of it does. You know the worst-case scenario before you enter, and you've already accepted it. That acceptance is power. It frees your mind to focus on the trade itself, instead of being consumed by dread. And isn't that what you want, to trade with clarity instead of anxiety? I'll tell you another truth. The market will always offer another chance. Always. There will be another breakout, another trend, another opportunity. But if you lose too much on one trade because you had no exit plan, you might not be around to see the next opportunity. That's why predefining your exit is not optional, it's survival. You can always get back in. You can't get back what's lost forever. Pride and hope, those two words sound harmless enough, don't they? A man thinks of pride as his backbone, his confidence, his strength. He thinks of hope as the light that keeps him moving forward when times are hard. Out in the world, maybe that's true. But in the market, pride and hope are poison. They are enemies of discipline, and discipline is the only friend you've got when you're trading. The market doesn't care if you're proud, and it certainly doesn't care if you're hopeful. It only respects the man who obeys his rules. Do you see the danger yet? When pride takes hold of a trader, he refuses to admit he is wrong. The tape says one thing, the price shows another, but he clings to his own opinion as if the market will eventually bend to him. It never does. The market will humble him, grind him down, and eventually strip him bare. I've been there myself. I've sat with a position, red flashing on the ticker, and told myself, it's only temporary. I can't be wrong. But the more I told myself that, the deeper the loss grew. Tell me honestly, have you ever done the same? Hope, on the other hand, whispers sweet lies into your ear when you're in trouble. Hope says, hold on a little longer, it'll turn around. Hope says, just wait, you'll be rewarded for your patience. But hope is not a strategy. Hope is gambling in disguise. Hope is the opposite of discipline. When you hope, you stop acting, you stop following your plan. You freeze, like a deer in headlights, while the market runs you over. And afterward, you look at your empty account and wonder how it all happened so fast. Here's the truth. Pride and hope are natural instincts. Every man feels them. But in trading, instincts often lead you to ruin. You must replace instinct with discipline, emotion with rules, ego with humility. Otherwise, you will not last. The tape is bigger than you. The market is smarter than you. The moment you think you're too clever to be wrong, you've already lost. So let me ask, when you trade, do you act on discipline, or do you act on pride and hope? I'll give you an example from my early years. I once bought into a stock because the pattern looked strong. The breakout was clear, the volume was heavy, and I was sure I had it right. But no sooner had I bought than the stock reversed. It broke down below the level I had marked. Every rule I had written told me to get out. But pride stepped in. Pride said, "No, Jesse, you're the one who reads the tape better than anyone. You know this market. Don't let a little dip shake you out." So I held. Then hope joined in. Hope whispered, "Just wait another day. It'll come back. It always comes back." But the stock didn't come back. It sank lower and lower until I was forced to sell, broken and beaten. If I had cut my loss where I planned, it would have been a scratch. Instead, pride and hope turned it into a wound that took months to recover from. Now you may say, "But Jesse, isn't pride necessary? Don't you need confidence to take risks in the market?" Confidence, yes. Pride, no. Confidence means you trust your method, but you still obey your rules. Pride means you think you're bigger than the market, and the market has no mercy for that kind of arrogance. Confidence builds discipline. Pride destroys it. Can you see the difference? And hope, what good has it ever done a trader? Hope belongs in the church pew, not in the stock exchange. When you place a trade, the outcome is already written in the tape. Either it works, or it doesn't. Either the stock behaves, or it fails. No amount of wishing will change that. The only tool you have is action, and action must be governed by rules, not by daydreams. So when you find yourself hoping, stop and ask, why am I hoping? What rule am I ignoring? Because hope is only the mask you put on to avoid admitting a mistake. The men who survive in this business are not the ones who never feel pride or hope. They are the ones who know how to silence those voices before they take control. They are the ones who cut their losses the moment their plan says to cut, no matter how much their ego protests, no matter how much their heart wants to believe in a turnaround. They understand that pride and hope have no seat at the trading desk. The only guest welcome there is discipline. Think about what pride really costs you. Pride makes you hold losers, but it also makes you sell winners too early. You might ask why. Because when a stock is rising and you're sitting on a profit, pride says, take it now. Prove you were right. Show the world you called it perfectly. But the great moves, the ones that make fortunes, only come when you sit and let them grow. Pride robs you of that because it wants to cash in the applause. Do you want applause or do you want wealth? Hope plays the same trick on the other side. You might be sitting on a loss, but hope tells you to wait, to ignore the rule, to pray for salvation. The irony is cruel. Pride makes you exit your winners too soon. Hope makes you hold your losers too long. Put them together, and you have a perfect recipe for disaster. Small wins, big losses, that's how traders go broke. And yet, isn't that the exact pattern most traders fall into? It doesn't have to be that way. But to change it, you must strip pride and hope out of your trading. You must replace them with humility and discipline. Humility to admit when you're wrong. Discipline to act on your plan no matter how much it hurts. The moment you do that, you'll find something powerful happens. The market stops feeling like an enemy. It becomes neutral. A loss doesn't feel like humiliation, it feels like part of the job. A win doesn't feel like a victory lap, it feels like the natural result of following rules. Isn't that the way you want to trade? Calm, consistent, steady? But I'll warn you, pride and hope never truly vanish. They sit quietly, waiting for a weak moment. After a string of wins, pride will whisper, you can't miss now. After a string of losses, hope will murmur, just hold this one. It'll save you. And if you let them in, even once, they'll undo months of progress. So you must remain on guard always. Pride and hope are patient enemies. They don't need to win every battle. They just need to win once, and that one time can destroy everything you've built. So I'll put the question to you again. When you're at the screen, and the market moves against you, what voice do you listen to? The voice of pride that refuses to admit defeat? The voice of hope that begs for a miracle? Or the voice of discipline that tells you exactly what to do? Protect capital first, opportunities come later. That is the real law of trading, though most men learn it only after they've lost enough to feel the sting in their bones. Everyone comes into the market chasing opportunities, chasing the idea of striking it rich on the next move, the next hot stock, the next big swing. But they forget that opportunities mean nothing if you don't have capital left to take advantage of them. You can read the tape as sharp as any man alive. You can catch a glimpse of a trend before the world sees it. But if you've already squandered your stake, what good is it? You're just a spectator. Do you want to be a spectator or a participant? Capital is your lifeblood. Without it, there is no trading, no second chance, no seat at the table. And protecting that capital has to come before everything else. Before pride, before ego, before the dream of profits, the man who lasts in this business isn't the one who chases every move. He's the one who defends his stake as if it were his very life. Because in a way it is. Without money, you can't play the game. And this game only rewards those who stay long enough to catch the rare, golden opportunities when they arrive. I've said before, opportunities always come. The market is endless in its motion. Trends rise, trends fall, stocks break out, stocks collapse. Every day there is movement. But your capital is finite. Once it's gone, it's gone. And that's why the preservation of capital is the first duty of a trader. Ask yourself, when you enter a trade, is your mind on protecting your stake, or is it already spent dreaming of profits? That one question will tell you everything about your chances of survival. Many traders fall into the trap of thinking they need to be in the market all the time. They fear missing out. They can't stand the thought of sitting in cash while others are trading. But what is cash if not the strongest position when the market is uncertain? Cash is not weakness. Cash is armor. It protects you, keeps you ready, lets you live to fight another day. Do you see that, or are you too impatient to wait? I remember times when I forced trades, thinking I had to keep busy, had to stay active. And what happened? I paid for that impatience with losses, each one eating into my capital. Then, when the real move finally appeared, the kind that could have paid me tenfold, I was too battered, too depleted to act. That's the cost of forgetting the rule. If I had simply sat in cash, protecting my stake, I'd have been in prime position to pounce. Instead, I was limping on scraps, watching others ride the move I had dreamed about. The hardest thing to learn is that opportunities never stop coming. There is no last train leaving the station. That's a lie your emotions tell you. The tape never sleeps. Another setup, another swing, another breakout will appear.